Hey guys, welcome. We've made it to episode 10 of Odds Are, your S&P 500 weekly market forecast. As always, we'll begin by taking a look at the previous week's price action. And the only way I can describe it is that the froth has turned bubbly. Or is it buble? I don't know, too many commercials. But either way, the market is just going up and up and up. And so let's take a look at the relative view from last week and see where our forecast landed. All right, you can see that the market did in fact breach one of the breach points as we predicted. It went above 41.49. Not the direction that I would have thought. I would have thought it would have gone down to the 48.48 level, 40.48 level, excuse me. But this market continues to head on upwards. So it breached to 41.49 and it came close to settling above the 41.84 upper settlement limit. It did not. It settled just below 41.80, and we are looking at another situation where the market did not even come close to breaching the lower breach point or touching the lower settlement limit, or definitely not coming anywhere near the parabolic SAR, which is all the way down at 38.47. So that was the price action for last week. Let's take a look now at some of the moving averages as we head into this next week. All right, so again, I think I could just probably skip this slide from now on, at least until something changes. It's just green across the board, bullish, bullish, bullish on the short term, medium term, and long term. Let's jump right ahead to the breach points. Okay, so our breach points for this coming week are going to be 42.06 on the top side and 41.24 on the downside. So we're still a little closer to the 42.06. Let's go ahead and add the next level. So we're going to include now the parabolic SAR, which has moved up from 38.47 to 38.74. I promise I did not plan that. It just kind of inverted those numbers. But the still well below the breach point level and below, as you'll see here next, the expected settlement range, which if we pull that up now, you see the expected settlement range is going to be between 40.61 and 42.49. Odds are staying pretty consistent, right around 78, 79%, and for the breach points, right where we would expect them to be, above 80, 81% right there. And then you can see again the 38.74 level, pretty out of range right now. I mean, the market could touch it, but we definitely have a lot of other things or milestones to hit before we get close to that 38.74. All right, now to the good stuff. We have two signals that are rarely triggered, and they are basically signals to warn us of when the market is considered overbought. Now, there are a lot of different ways to use this. People use technical oscillators, things. They look at the RSI, they look at the percent R, the Williams percent R, they look at stochastics, they look at the Connors RSI. And feel free to look these things up, but they each have basically the same idea, which is they want to measure how fast or how much the market is rising, and if it goes up too fast or too soon, basically it's going to give you a signal that it is in unsustainable territory. It is overbought. And so the idea, of course, would be that the market would have to cool down and pull back in order to get out of that overbought state. So we have got two signals, and what I'm going to do is I'm actually going to pull up the expected relative view for next week first, right? So let's pull that up here. All right, and we will see once we've gone over these where these new signals fit in with our already established forecast here. All right, so we've already covered all these, and now I'm going to add in another layer. It's going to change the scale a little bit because I got more writing. All right, here we go. All right, so obviously the blue is the new signals here that were previously not included. And so the very, very, very top one there, 42.35.75, there is a 92% chance that there will be no breach of that level. Again, this is all based on historical data going back about roughly 22 years now. And consistently, when this signal has been triggered, 92% of the time, the market does not breach a certain level above, which in this case happens to be the 42.35.75 level. The second half of that signal actually has to do with a downward breach of the 41.53.5 level. So there's a 92% chance that it won't breach the 42.35, and there is an 82% chance that the market will breach below the 4153.5 level. So those two combined basically give us that bearish sentiment, which is what you would expect if you think that the market is overbought. The second signal, which is also in blue, but you see it's right underneath that 4206 breach point. It's at 4205.75. That one is an 87% chance that there will be no breach. So basically you could look at these, put them right together. They're only 0.25 of a point away from each other. So if you're looking at the breach points and you have an 87% chance that there will not be a breach of the 4206 for all intents and purposes, and there is an 81.2% chance that there will be a breach, and there's an 82% chance that there will be a breach of 4153. Put all those things together, and I'm seeing that there is a very, very good chance, odds are that we will have a breach of the 4124 lower breach point as opposed to the upper breach point. Now, again, none of these numbers on the screen have 3 digits, right? They're not 100%. Every single one still has a margin where it could actually go the other way. But in a market where, honestly, it seems like, 50-50 is kind of like the name of the game, really. And in some cases, all you need is a small edge to be able to have that advantage. If you're talking odds of 87, 92, 82%, I mean, these are pretty good, indicators, and I'm definitely staking my claim on this position here. I am definitely short. I mean, I will be fully transparent on that. I do believe this market definitely has to pull back a bit, but you'll see that all these highlighted blue ranges here, those are a new overlay, and we are going to keep those up and again revisit them next week when we take a look at what happened a week prior. All right, so let's take a look now at, didn't see that one coming. All right, so what did I not see coming? Just when you thought it couldn't get any worse, right? So I'm thinking market has got to take a breather, and it just kept going up, which is fine because honestly, now I've got a very concrete signal from my quantitative model telling me the actual percentages that the market will either go down or not breach above a certain level. So now I've got that backing to support my intuition, to support my thought and analysis of the market as a whole. So it did go up, but I'm actually not upset at all. Like I said, I'm building my short position, and I am definitely going to stick with it. All right, and so that brings us now to the quote of the week. Let's pull that up here. All right, so the quote of the week this week is from John Templeton, who is a famous trader. In fact, I think Money Magazine once named him like the best stock picker back in like the 90s, and he definitely made a name for himself. But in this quote, he says, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." I don't think there's any better word to describe what's been going on. This is definitely euphoria. This is, Powell going out and easing the fears of, market participants. This is, the vaccines are coming out, things are opening again. This is all psychological. I mean, we've got so much goodwill and euphoria going into this market. And I actually had a very interesting conversation with a coworker of mine who he described it as a horse. And so the market having that forward momentum like a racehorse, and then the government or the powers that be releasing the reins and allowing it to run free to its full capacity, full speed ahead. And while I understood where he was getting at, my first thought was, well, now you have a wild, untamed horse running freely, and it's either going to veer off track, it's going to collapse of exhaustion because there's nobody actually keeping the pace. Which gets back to my thoughts last week, which is the pace of this rise is unsustainable. So we will stay monitoring that as we go forward in the weeks ahead. And on that note, I wish you guys a great week. Hopefully the weather is nicer wherever you may be. Enjoy it. And until then, have fun, stay safe, and don't forget your trading fundamentals, because at the end of the day, they will help you out. All right, guys, take care. See you later.